Okay, so we're back, and I'm going to jump now up and into things that create these ethical dilemmas that we've got. I like this picture of the tennis shoes. That's what I wore when I was in high school, is those Converse. Morals are personal beliefs about what is right or wrong. Ethics are community guidelines that define good versus evil. There's overlap between morals and ethics, but they serve different roles, okay, in your life. Respecting others' rights. Animal testing, right? Like, my daughter got a job at Leary, which is animal testing out on the base, out at Sandia Laboratories. And they use beagles predominantly for a lot of the testing that they do out there. And when she got that job, they reviewed her Facebook page and saw that she, at that point, she was a vegan. And they sat her down and said, look, you're out here, you've got this job with, and this is what we're doing is animal testing. How do you feel about that? And are you really in this job and in this role because you're now going to talk to the TV stations and, different groups? And she said, no, I don't do any of that kind of stuff. What I eat and that I've chosen not to eat meat is just my own personal decision, and that's as far as I go with that. But how you could harm one of these beagles, if you had a beagle, family dog, we had one, yeah, they're loud, but they are so sweet. Oh my gosh, they wouldn't even consider biting somebody. They just don't. They're wonderful. But a lot of these decisions in your life, you're going to need to decide, like my daughter did. Yeah, I'm okay working for a company that does that. It's good money, it's nice people, it's where I ended up after she got out of the Air Force. So, okay. That's what happened. There are several universities throughout the United States that teach ethics. So if you decided, this is something I'm really curious about, I'd really like to spend some time studying, the Wharton Business School, which is one of the preeminent business schools in the United States, has a degree you can get in ethics. Thomas More University in Kentucky, or Santa Clara University in California. I think Santa Clara is a Jesuit school, but they have a ethical studies program if you wanted to get a bachelor's or a master's in that. Places that we find ethical issues bubbling up. Where I've seen it happens a lot in conflict of interest. So, can somebody give me what they think a conflict of interest is? If I say you might not want to work on that because there's a conflict of interest.
So you could benefit from both sides, or you have dueling obligations or dueling duties.
Right. Dueling obligations or duties, or, it's been presented to me oftentimes with being on a board of a company. Well, if you're just on that board because you want to do their insurance, that's probably not a good idea. when I was first an agent, the church I was attending approached me and said, will you write our insurance? And I thought, well, yeah, I got to make my quotas this month. I'll write up your insurance. Unfortunately, I was with a direct writer who was not good at writing church insurance, and it would put me in a situation of conflict of interest. So my dad, who was still my mentor at that point in insurance, he said, don't do it. Don't go there. That's probably not a great idea as to where you ought to end up. You know, I saw different ethical situations as my kids were growing up. My mother-in-law, who I loved, was a great gal. Very different from my mom and my parents. But she was one of those where you go into a restaurant and it says the children under 5 eat free. And she's lecturing my kids, tell them you're only 4, you know, as they're walking through the door. And it's like, Grandma, don't do that. I mean, that's not a good idea, just to save a couple of bucks on a meal, you know, and you're teaching them something inherently to do something to get something out of it. That's just a bad idea. You know, I think we or maybe our kids had that situation where they went into a store and they took something. And then you leave the store and you realize they stole that candy bar or that little toy or something like that. My son did that, and I ran him back into the store. We got home, actually, and then I drove back to the store, and I made him take that toy back to the manager and explain that he had stolen it and see what kind of repercussions were going to happen. In certain ways, I was a tough dad. And the silly manager didn't want to, you know, actually confront him with that and say it's wrong. It's always wrong. And that sign that says shoplifting will be prosecuted, you know, you could end up in a situation like that. No, it was, oh, that's no problem. Oh, don't worry about it. All kids do that. And it's kind of like, oh my gosh, I was trying to teach him this really good lesson and you're just blowing it for me. But that's something that, you know, I said, stand up and let your children know, let your family know, this, I'm not gonna put up with this. This is not somewhere I want you to go. My grandfather lived like 4 or 5 houses up the block from me when I was a little kid. And he would come down every evening. There were 5 kids in my family. And he would try to get us to go on a walk with him. He walked every evening. And I didn't understand why he would do that when I was yet a little kid. I thought, well, that's, you know, he's got a walking stick and he goes around several blocks and then he comes back home. And I realized years later, he wanted to tell me stories about things he thought were important, and listen to what questions I had, and let me know what he would do in that situation or what he would say. I wish everybody had a grandpa like mine that spent the time and effort and energy to try to make sure the kids were on the right path and going the right direction. Unfortunately, today we have a lot of families out there that are just completely dysfunctional, and they're not doing that. If you can be that person in somebody's life, be that person. Be there to talk with them, to reassure them, to let them know this is a good idea or that's a bad idea, and, you know, help guide them. You know, you don't have to tell them how to do it, or, you know, I think the helicopter parents is ridiculous. You can't do too much for them or they won't know how to do it for themselves. But that guidance is so critical in the lives of our young people out there. So we should require the same ethical foundation of the business that we're working for as we require of ourselves. I will right up front tell you, if where you're working and who you're working for are not standing for the things that you know are important, you need to get out of there. I can tell you, with that board of directors for the charter school, I would have paid serious money to not have gotten into that situation. I had any clue that that was going to happen. I mean, we're talking hundreds of hours of unraveling how that director got into the money, how much he stole, and what happened there. And then all of the time with the attorneys. And, you know, I ended up on television a couple of times with the KOB and KOAT, you know, microphone in my face saying, "Why didn't you know?" It's kind of like, okay. And it's like, no, the processes that I came into and where we were, nobody knew this was going on except the financial director. And he would look at things and say, wait, there's shenanigans going on over here. And so he turned that in. Okay, one of the things, areas, so I talked of conflict of interest, and I don't know, there's just kind of a feeling as you start working on something where there's something in the back of your mind that just says, this isn't quite right. Listen to that. Even if you're not practicing, you know, an ethical thing every month, every week, or whatever, there's something deep inside of us that says, you know, this may put me in a bad situation at some point where I'm trying to sell more or increase the premiums or whatever. You know, one of the things I just really detest is when an underwriter gives me a price for something and says, okay, I'm going to price it here, but I can go much lower. Don't leave too much money on the table. And it's like, well, isn't that smoke that you're giving me? I mean, give me a price. I can sell it or I can't. Don't tell me, you know, just keep coming back to me and let's get it lower, that kind of thing. And then the guy thinks I'm some kind of shyster to do a situation like that. I just refuse to participate in that type of situation because I think it gives the whole industry a bad name when they see that kind of thing going on. They believe, a lot of our clients out there, if I show you the price that I'm paying, you're going to get it that much underneath it, and then next year it's going to go up to where it was anyhow, you know? And it's like, don't sell on that principle. It won't build your book of business. It's not what they want to see, and it's not what you want to see, you know? Be steadfast in, this is what it is, this is what I can do for you, and sell it on you, you know? You want to do business with me because of who I am and what I can provide for you, is how I would go about that. I can go lower, just tell me where I've got to go. Yeah, boy, that's frustrating. So when we do insurance for, say, a contractor, what does the state law say about workers' compensation for a contractor? Can somebody tell me that? Who has to have work comp? Anybody doing commercial insurance out there? I'm getting blank looks. No? That's not what you guys are doing? Okay, all right. Well, contractors have to have workers' compensation, even if you have 0 employees. That's the state law. I recently met with a fencing contractor to talk to him about his crew and workers' compensation, I thought, and then come to find out he has no workers' compensation insurance. Workers' compensation insurance is going to protect you in the event an employee is injured, or if they get sick, or if, something untoward happens to this individual and their medical bills. Contractors have to have that. And he told me, well, I'm not listed. I'm a fencing contractor. So by law, I don't have to have workers' compensation insurance. And it's like, well, so I actually went in and looked at how the state statute defines a contractor. Means any person who undertakes, offers, or undertakes to bid or other means purports to have the capacity to undertake by himself or through others contracting. So this fencing contractor, he's a contractor. I don't have any doubts in my mind that that's what he's doing. But it gives this list, and you're not going to find fencing in there. So legally, can he get around that? I'm going to say if bad things happen, the state is going to say, you should have had it. We said contractors, and you're going to fit the definition of what a contractor is, even if we didn't list you as one of the contractors that are out there. Boy, the way people would like to get around that, and the way I'll approach that is, these people, and he had a crew of about 10, do you love them? And I think without a doubt, he'd say, yeah, these are my people. These are my men. I'd say, well, as you're stomping around that property, if somebody gets bit by a rattlesnake and loses a leg, wouldn't you like to have some coverage for that? Wouldn't it make sense if somebody is grievously injured setting up these fences that you're putting up, that you had a pot of insurance money to take care of that situation, plead to his better judgment, in a situation like that. Sometimes I've been successful with that, and sometimes I haven't. But fencing is not in the description of what a contractor is. So he was right. It doesn't right there say you gotta have it. Laws set the standard. Anybody out there familiar with the charge of the Light Brigade? Forward the Light Brigade, was there a man dismayed? Not though the soldier knew someone had blundered. Theirs not to make reply, theirs not to reason why, theirs but to do or die. Into the valley of death rode the 600. It's Alfred Lord Tennyson wrote this a couple hundred years ago about 600 men that rode into certain death because the people in charge of them told them, you have to do this. And I don't know that any of them survived. None of them came out of that. And they knew it. They said they're all set up on the high ground, rifles trained down into where we're going to be riding. And that was what happened. So just because somebody says you need to do this, you're still the person that's in charge. You're the one making the decisions of whether to do it or not to do it. I have very rarely been asked to do something like that. When I was a college student, I worked in a music store for a while, and they sold grand pianos. It was one of the items, their big ticket item. And they had a lease, like they would lease these pianos from Kawai or Yamaha or one of these big music companies. And every 6 months they had to turn in a report of how many they had sold. And then they had to pay the company for those things. And the owner of that store brought me this sheet and says, you know, it says we have 10, I know we only have 7. I want you to sign this saying that there's 10 still here on the floor room show, right there in the business. And I knew he was going to fire me if I said I'm not going to do it. And I didn't do it. I said nope. Not right then. The next day when I came in, I hadn't signed, and he says, you got to sign that for me so I can send it back to the finance company. It's like, not going to sign it. Just ain't going to do it. But since I've been working in the insurance industry, and it's something I'm proud of, that kind of thing really rarely happens. It does not occur very often, but it will occur, and you need to be aware that that's of what your options are. So conflicts of interest, the conflict between private interests and the official responsibility of a person, a position of trust. Conflict of interest occurs when personal interests clash with professional interests, like you so aptly described, that there's a potential on both sides, maybe for money or something else. They can lead to legal ramifications and job loss if not managed. Disclosing conflicts early promotes transparency and accountability. So if you're on a board and something is presented to you that you feel you have a conflict of interest, you can tell them, I've got a conflict of interest and I'm not gonna vote on that. I'm gonna stay out of it. And it can be as simple as a service group that you're in or something like that. Be aware of what a conflict of interest is, and that the fact that you don't have to be in the middle of that. You can easily get out of that. Financial conflicts are common, especially in the financial industry, such as insider trading. You know, how much money could I make if I was a United States senator? Organizations can establish policies to manage and disclose conflicts effectively. So you might go back to your agency and ask them, you know, do we have a conflict of interest statement that for our agency that I might use if I needed it? If you can't find one, you can get one from Rachel or me. She doesn't have one. I mentioned my church asking me if I would handle their insurance, and then realized it really, as a parishioner, it's probably going to be a conflict of interest at some point. So might not be a good idea. Nonprofits I used as an example. That's another place where you just need to be careful. I would say if you're on the board, you probably shouldn't write the insurance. It would be okay to look it over, but I wouldn't recommend that you write it, because it could. Imagine if a claim is not covered and the board is all looking at you as the insurance agent saying, you wrote this policy for me and it doesn't cover what we think it should cover. And your name is mud. A situation like that. Okay. One of the places that is a common problem with your of ethics for an agent is the differences between a standard and an excess and surplus insurance. What kind of insurance do you work with?
Property and casualty.
Property casualty, okay. How about you?
I've
A technology company. Oh, cool. How about you?
Group insurance.
Group insurance. Okay. So benefits and that kind of stuff?
Yeah, benefits.
Okay.
Employee benefits.
Employee benefits. Okay. Employee benefits. Okay. Cool. So in the P&C world, there are, I don't think you find this really in group benefits or health insurance types of products, but we have two different competing industries. We've got standard insurance, and that's State Farm and Farmers and CNA and all of those companies out there. And then you've got what's called excess and surplus. And this can be wild stuff. You get something that, Travelers is not interested in writing because of the risk involved. You have to go to what's called excess and surplus insurance. And there's certain criteria that the state has set up saying you can't do that if it's just cheaper, because excess and surplus insurance is not overseen by the insurance department. They can do pretty much whatever they want to out there. That's how you get insurance for rockets and explosives and certain gun manufacturing stuff like that, is through the excess and surplus market. Standard insurance is highly regulated. The state also rates the policy terms, and standardized must be approved by the state regulators. Policyholders typically cover common lower risk scenarios that fit within well-defined categories, personal insurance, homeowners, restaurants, auto repair, that kind of stuff. Those are just standard risks out there. And claims handling is a big deal. If an insurance company doesn't respond to a claim, you've got problems, right? And that's any insurance industry out there. My experience with excess and surplus is they're slow at best. And in a lot of cases, they just don't want to handle that claim, whatever it was that was turned in. And the state regulators can't come marching through their door and say, you got to take care of this, because excess and surplus is not regulated by the state of New Mexico. So you can run into claims handling problems where there's nobody to back you up. You can't go to the state insurance department and say, help me get this claim settled. I know it's covered or should be covered when it's excess and surplus. There's also a state fund that backs up standard insurance. So if that company goes bankrupt, the state basically will participate in making that individual whole. Excess and surplus doesn't have that. So Lloyd's of London is probably the largest excess and surplus insurer out there. They've been doing insurance since ships were, going to India to get spices. They like the really risky stuff out there. They're one of the companies that provides that excess and surplus stuff. Also, new insurance. Anytime like cyber, when it was new 20 years ago, nobody would do it. Lloyd's in London were one of the first companies to come out with, we've got a contract for cyber. Employment practices, when it came out 20 years ago, another brand new insurance exposure that the public and the insurance industry realized we got to start covering some of this stuff. So what the agents that are providing this have to provide is a broker affidavit. And this says, A down here says, after making a diligent search, I found that the full amount or type of insurance requested could not be obtained from an authorized insurer in New Mexico. So you can check that box. Or within the last year, I've tried to place this type of coverage with at least 4 insurers authorized in New Mexico, including insurers by whom I am not appointed, and therefore know from substantial recent experience that this coverage cannot be obtained from any authorized insurer in New Mexico or standard insurer, okay? Check that box and then sign it. Now, I have seen the practices that producers will check a box, send it to the insurance company without actually doing the work behind it. And were the state to come marching in your door and say, hey, we've got this affidavit from you saying that you checked with 2 insurance companies, who were they? Where did that happen? You could find yourself in a bad situation for that. Or, within the last year, I've approached 4 different insurers. They would ask you, who were they? Who did you talk to over there? So this is something that my agency is making sure that we're doing this, because we don't want the insurance division coming in and asking us questions about these affidavits that we're filing. And this is an everyday occurrence with my agency, is these affidavits have to be filed. And they're a pain in the butt. If you know this thing is doing O-rings for the shuttle, you're not going to get standard insurance for that. That ain't going to happen. So, signatures. Don't sign anything for someone else, ever. That's hard and fast principle. I have a producer agent that I know that was fired because they signed something for the insured saying it was the insured that signed it. And lo and behold, there was a claim, and they go back and look, and by golly, the insured never signed that document, whatever it was. So, and this is all industries. I don't care if you're doing group or you're doing, P&C. Don't sign something for somebody saying it was that they signed it. It's part of your foundation. I don't do that. Sorry, I don't care how. And I'm one for driving 50 miles to meet with somebody, get all the paperwork done, and come back to the office and realize they didn't sign that. And having to drive. You've never done that, Matt, have you? And that thought racing through your head saying, I should just sign this silly thing. It's like, no, don't do it. That signature is one of the foundations of our legal laws and premises of how things work. It's really, really a bad idea. Okay. The key difference is the standard regulated E&S is Wild West. Focuses on common lower risk policies, covers high risk policies, unusual stuff. Rates and terms are standardized and approved by state regulators, offering less flexibility, backed by state guarantee funds. Right now there's a fight going on between excess and surplus and the standard markets. Business was flowing to the excess markets during the last, say, a little less than 5 years since COVID, because the standard markets weren't making the profit margins that they thought they should. And so they're kicking out, these kinds of operations. And now all of a sudden, the standard operators have money to work with, and so they're taking these things back away from the excess and surplus market. The excess and surplus is saying, holy smokes, we got to hold on to this because it's what makes us whole. And so they're lowering rates and that kind of thing. And so they're tempting agents to keep that insurance with that excess surplus market with rate. And it's, I don't know, that's the kind of ups and downs that we go through in our insurance business, that we have to be aware of. This is what's going on, and if they offer you a really unbelievable rate, it's probably because it ought to be in the standard market instead of the excess market. Okay. I'm going to go through some examples of what happens when we fail to stand watch and have the ethical foundations or the moral foundations that we need. One of the biggest examples is WorldCom. Boy, what a disaster that was. We had an ethical tape, I think, that the independent agents could send out, and it was just WorldCom. That's all they talked about for, like, I think it was just an hour back when we used to only require an hour of ethics. WorldCom was the second largest provider of long-distance telephone services in the world. And Arthur Andersen was their accounting firm. And they were out, I think, Houston, Texas. They were in this, 10-story building, and the whole 8th floor was Arthur Andersen accountants. Their relationship was a really bad situation where they were taking care of the bookkeeping, but they were also leasing space and working with all kinds of other projects with this massive, think of Verizon. That's the kind of money and clout WorldCom had at that point. And they got their accounting, along with the accounting company, agreed to fudge the numbers that were going into their results. And some people who worked for them stood up and said, nope, I'm looking at these numbers that you've reported and signed off on, and the accounting group has said are your real results, and they're not right. And it got from bad to worse and eventually led WorldCom into bankruptcy. And surprisingly, Verizon bought them up when there was basically nothing left of WorldCom. Freddie Mac and Fannie Mae, do we know who they are? Could you tell me who Freddie Mac is?
No, they're mortgage lenders.
Mortgage lenders, exactly. It's the feds, the money that they're lending on the back of the federal government. And the last huge financial crisis was, and they've actually got 2 years before this happened, they've got senators coming in to discuss the situation with Freddie Mae and Fannie Mac, saying, it's a house of cards. You are overlent. We're lending money to people who have no business buying homes and owning real estate all over the nation. And it created this unstable housing and mortgage crisis in America. Throughout America. And after the fact, you listen to this senator bringing the information to the whole Senate and saying, we're backing this. We're the ones that are actually saying it's okay, knowing full well, I'm going to tell you this, we don't have the finances to handle this. And it failed, and a lot of the presidential election came down to, what are we going to do about it, this financial crisis? And the only solution, one presidential candidate said, I need $500 billion to bail us out of this situation. And the other guys, I need $1 trillion to bail us out of this situation. It's kind of like, well, what kind of option is that? How about we just do ethical business practices and not lend money that people that shouldn't be borrowing or being lent money to, and it'll solve this in a better term than trying to bail it out with a bunch of money. Okay. Now the taxpayer, they're out of money, so you lose. I looked into how much the managers were being paid at Freddie Mac and Fannie Mae, and it was like to the tune of $7 million a year. And basically they had no business. They shouldn't have been in those positions in the first place, but then the government had decided in their wisdom, we'll pay you $7 million to fail at what you're doing. And nobody's going to jail, I'm going to tell you. Nobody, in spite of the practices and what they did, nobody went to jail over this situation, this part of the situation. $7 million. You look at this and you just think, wow, there is waste beyond belief in certain areas, and you just wonder who's in charge of the piggy bank. So the mortgage bonds, here we get into insurance part of this. AIG, who was at that point the largest insurance company in the world, especially in the United States, was actually backing these mortgages with bonds. So they take all of these mortgages and they would pool them together, pull them into this big package, and then they would write guarantees on these mortgages, saying these people will perform and we'll guarantee it, which further pushed everything for the financial institutions to accept it. So AIG, as we went through that financial collapse, really lost their shorts on what occurred. I'm not sure how many billions